Did I mention last month there would be continued volatility and uncertainty in the overall economy? Well, in this month's report, we'll take a look at the impact that it's having on rates and the local real estate market. Sorting through the noise and simplifying the data, because when it comes to Tucson real estate, the numbers tell a story. Let's break down the latest market trends so you can make an informed decision about buying or selling in 2025. Now, unless you've been living on a deserted island for the past month, you know that tariff talks and the federal budget negotiations have dominated the national conversation. By the way, if you have been living on a deserted island, congratulations. I love that for you. The tariff talks have caused a lot of uncertainty in the overall economy, causing downward pressure on the stock market. While all of that has been going on, the CPI report came back last week at 2.8% year over year, and that's slightly lower than the projected 2.9%. This slight reduction in inflation fears helped the 10-year Treasury rate come down slightly, which helped improve mortgage rates, which are sitting around the mid-6s for a 30-year conventional and even better for an FHA loan. So what are we seeing at the local level? For the Tucson real estate market, in February of 2025, we added 1,930 new listings to the market, which is about 300 less than we saw added in January and 200 more than we saw last February. For sales, we had 1,056 closed transactions in February, which is around 120 more than we saw in January and 90 less than we saw last February. This rise in sales from January to February is very typical. We usually see the number of sales increase from the beginning of the year with a peak in around May or June. After all was said and done, the total number of active listings came in around 4,500, which is still in the seller's market territory, but we continue to move closer to an equilibrium as the number of active listings increases slightly each month. And for the median sales price, we came in at $371,000, which is up 1.7% from last year, and the average sales price is up 5% to around $450,000. With prices continuing to increase, our advice continues to be for prospective buyers to lock in a price and purchase a home, and then consider a refinance down the line if rates continue to improve. As always, we're here to discuss your individual scenario to determine what could be the best move for you. At L Group Real Estate, we help busy people buy and sell real estate easier, simpler, better.